we just accept payments and buying things in shops in person as they are. But as you rightly said, that's from the previous century. It's from 70 years ago. And what can we do now when you actually take away all that legacy and say, actually, this is new, this is what we can do. And I'm excited to hear what that involves in the future. But before we do, let's find out what the winners and losers might be in that ecosystem. When we digitize in-person payments, who could win out of this?
Digitizing, let's say, the last mile of payments or digitizing in-person commerce, everybody can be a winner, really. And,
nice.
the reason for this one is it's a systemic problem that we are solving there. In the former days, really, the processor has been glued to the payment terminal because it was all about efficiency of the payment process and security, and therefore kind of the payment terminal to ensure this one. And to change, let's say, providers, to integrate, let's say, new providers into the checkout process is kind of totally difficult, especially since this process has been, let's say, copied and adopted by different, let's say, countries and different, let's say, payment regulations. Therefore, while it's a similar process, it's different in Germany, it's different in France because you have different providers. And that makes it very, very rigid and very hard to innovate in this space. So what we are doing is kind of we really provide this flexibility layer to enable really the exchange of providers and also the easy introduction of new, let's say, a payment methods like digital payment methods or value-added service partners, giving you this flexibility. And so to come to the winners and losers, everybody can win. The traditional minded, let's say, acquirers and processors, they can modernize their overall payments estate. So especially processors, they buy their competitors, you have mega mergers, so you have device estates all over the place. So suddenly they can kind of really harmonize them. PSPs coming more from the online world can now jump into in-person commerce and bring their digital expertise to the checkout process. And ISVs on the other side, they, let's say, kind of can now, and they are kind of masters in integration and masters in understanding their customers. They can now really weave, let's say, their specialty into not only the digital checkout process, but also the physical checkout process. And ultimate winners are in this case then the SMEs on the one hand side that get better services at lower costs because kind of there is an openness, and also the bigger kind of merchants, especially, let's say, as they can now harmonize their in-person commerce and the digital commerce and really run it centrally and roll out innovations far faster than kind of in the previous times, and also at kind of, let's say, bring innovation now at the same time as they roll it out in digital commerce.
Now, that's all well and good, and I imagine a lot of businesses are very excited to have that, but for a lot of SMEs, for instance, they're time poor, and having all those disparate services must almost be a nightmare, even if they wanted to get on board. So I imagine there's one thing to connect them all, and I actually, on the FinTech show, I'm a buzzword breaker. I cannot stand buzzwords. So let's break down the definition of in-person payments orchestration before we go into the topic any further.
All right. So first of all, in-person orchestration. For me personally, it's all about really giving control of one's own destiny. And this is, in this case, for example, for an ISV, that they can design the journey how they envision this without being, let's say, somehow being held back by their overall back-end provider. And this is, let's say, kind of gives them choice to be creative and design new opportunities for their customers. If you kind of, let's say, and this is maybe a bit more esoteric, but if you look at it now from a kind of just pure kind of perspective, you can see it statically. You are able to exchange your backend providers on the one hand side, which was hard in the previous time. And you can also integrate new providers much faster, let's say kind of really in the overall checkout flow. Like, for example, just kind of simply integrating now a customer rating app, which seems easy, but it was extremely hard in the previous time to kind of really roll it out across different device types, for example. And therefore, kind of, it's about the static process, let's say, really giving choice of partners and the flexibility to design the checkout flow as, let's say, kind of really especially the ISVs envision this one. And SMEs are kind of benefiting from this one because they get better services from their partners. And this is kind of, and they also get more choice. And you can see this now. It's not about payments any longer. It's about financial services. So The ISVs get better equipped with more choices, deliver better services like not only, let's say, payment services, but overall financial service. And this is kind of really what changes the game for a lot of, let's say, kind of SMEs, because they are treated now much better than in the past.